All right, thank you guys very much. Good morning and thanks for tuning in. My name is Ron Parsons and I'm the commercial and builder business development agent for Stewart Title. And today I'm very excited to have with me Philip Scott, Managing Director and Certified Financial Advisor with the Scott Group at Merrill Lynch, and Jody Cody, VP and Wealth Management Loan Officer from Bank of America. If you didn't tune into the first meeting that we had this morning, they talked about a really great loan option, and I'd love to send you more information on that if you would like to on the LMA account. But now they have another one that they're going to be talking to you about now, and it is Mortgage 100 or Parent Power. And it's a really great option and really flexible and creative financing. So I'm going to let them tell you more about it. And if you have any questions, please put them into the comments section. And if you look down in the comments section, I have both of their names and contact information. So if you have a question that you might not want to necessarily put in the open chat section, you could contact them directly, or you could get in touch with me and I would be more than happy to put you in touch with them. So with that, Philip and Jody, thank you very much.
Thanks, Ron. So I'm here to talk about our Mortgage 100 or Parent Power, and we'll talk about the Parent Power a little bit later. But the Mortgage 100 program we offer here at Bank of America for our high net worth clients is really an opportunity for them to utilize the assets they have without liquidating assets to help them purchase a home. So we offer a program with 100% loan to value with that 0% down, which some of our buyers are really excited about right now. How it works is we utilize the assets that are held within Merrill Lynch, and we pledge those funds towards a down payment. The nice thing with that is it's not liquidating those funds that those clients have. We kind of put like a guarantee on those funds, hold a minimum balance, based off of what % down they want to put on that home purchase. So if they're buying a $500,000 home, they want to do the 20% standard down, we're going to pledge $100,000 of assets that they currently have held with us. What's really nice with this program is, like I said, they're not liquidating their funds. They're not having to pay capital gains or selling off any of their assets. Those funds are still going to be held and investing and growing as they see fit. They're still going to be able to work with their financial advisors and plan funds and how to move those funds and allocate those funds as they see best needed. That pledge account is held there for that home loan until the loan is up to 80% loan to value. So once that loan is at the original appraised value of 80%, say they bought it at $500,000, their loan amount's $500,000. Once that gets down to the $400,000, that pledge is then released. There's no more assets being held. If they wanted to go use it or sell, then that would be the opportunity then at that time to do that too. With this program, your payment is based off of that 100% loan to value. So that $500,000 home, your mortgage payment is going to be based off that $500,000 purchase price as well. So we're seeing this more and more with our rates being so low right now and historically low, but portfolio performance being so high. I'm getting this requested more and more from some of our clients asking, hey, is there a way I can do this without selling any of my stocks or bonds or whatever they have their assets allocated as? So a couple examples I wanted to share on this was I just had a client, I think it was in June. They wanted to go and buy a new home. They wanted to be a competitive offer, so they didn't want it contingent on their sale of their current home. Well, most of their cash assets were there in their home. They had their home or their current funds tied up. They didn't want to sell any stocks right at that time. So what we did is we were able to do a Mortgage 100. They went and bought their home at 100% loan to value, not liquidating any of their assets that are held at Merrill. A couple months later, they sold their home, were able to buy down their current mortgage. They did a recast, normal, standard, vanilla, loan then, no more pledged assets, and they were able to kind of bridge that time period without having to pay any capital gains or have any tax implications. The Parent Power. So it's the exact same program, but it allows parents or family members to pledge assets. Instead of liquidating assets, they pledge assets for like a gift fund or a gift like down payment. So I just had a client who, first-time home buyer, she was in Texas, and her mom was able to pledge her the down payment of 20%. And what was great was with this client, we were able to use that pledged assets as well as, she was qualified for a grant too as a first-time home buyer. So this first-time home buyer did her earnest money deposit, and then at closing, because it was 100% loan to value, she actually got some money back because that deposit covered all of her closing costs and then some. So it's a really good tool to use for family members. It's a good tool to use to help yourself or some of your clients purchase homes without having to liquidate some of their assets. So I just rambled for 5 minutes. Like Ron said, if you guys have questions, our contact information there's in the contacts. I work for Bank of America, but I work out of our Merrill office here in Reno. I work with a lot of our high net worth clients, but I also work, doesn't mean that you don't have to have a Merrill relationship with the bank. And so we have ways to help clients with this as well. So.
Jody, I have one question. In working with some clients in the past, one of the things that they really enjoyed about the Parent Power is that they were able to borrow 100% without any mortgage insurance. Can you share a little bit with us about that?
Yeah, so thank you for bringing that up. It's an important factor. So the pledged assets count as a down payment. So if they do the 20% worth of pledged assets, then you won't have mortgage insurance. It's going to be a standard loan, 80% loan to value. Kind of on top of that too is, I know what's really important for some first-time home buyers is they want to feel like they contributed themselves. So say, the kid was going to bring in 10,000, the parents were going to bring in the rest. We can combine it. So the pledged assets and the down from the kid can add up to that 20% and still have no mortgage insurance, even though the loan to value at final closing is 100%.
Thank you, Jody. I have a couple of questions, and then if you want to elaborate or have anything additional, but a couple of questions have come in. One is, what would the interest rates be on this type of a program, on this type of a loan program?
Absolutely. So the pledged assets, you're not borrowing any funds, so there's nothing we're going to charge you for having those pledged assets being held. The loan program itself can be a conforming loan, it can be non-conforming, it can be a 30-year fix, it can be a 15-year term. So the interest rates are going to be based on actual program you use. The pledged assets, because they're being pledged, isn't going to impact that rate. It's going to be, today's rate at that type of loan. We're just using pledged assets instead of the cash down payment.
Will those pledged assets, do those fall under the gift type scenario? Does there have to be the documentation and the paperwork and stuff like that if they're being pledged, or how do those then get written up?
Yeah, absolutely. So we work internally within our Merrill Lynch operations team to put in the pledge documentation. So we would send it to, the buyer of the home if you're doing the mortgage 100, or the parent if it's a Parent Power, and it's just a pretty much sign, date the form. Here's all the numbers and figures, but it's pretty simple.
Okay, great. And one more, and this is a question that came in specific to the Parent Power. What type of familial relationship does it need to be to qualify? Does it have to be, you use the example of parent to child, what other ones would qualify?
Yeah, so any family member really. So grandparents, aunts, uncles, nieces, nephews, grandchildren, siblings, any family member. It's very similar to like gift qualifications, fiance, step parents. So it has a lot of flexibility within the family to help, or not, an extended family, I should say too.
And where I've seen this used is maybe grandma has a stock portfolio, 2 or 3 concentrated positions, very low cost basis. She doesn't want to sell those stocks to help provide for a down payment. Instead, what she can do is she can just take a portion of that portfolio, pledge it in lieu of a down payment, and accomplish the same thing, and never have to pay capital gains tax, be in a position where it's going to help the grandchildren out. And once the property value has increased over time, or they've paid the loan down to that 80% level, then they release that pledge collateral, and you can just take those shares or whatever that portfolio value was, and grandma can just bring it back into her portfolio.
I think for a lot of our clients that we're seeing on this side with the prices doing what they're doing and everything else, that 20% cash down is getting more and more difficult. You know, as the prices go up, 20% cash. So you may have a grandson or daughter, son or daughter, or whatever the case may be, a few years out of school, making a nice living where they can afford a nice home. But with the prices that we're seeing, you know, 20% in our average prices being in the, you know, bouncing around 500,000 and 600,000, $120,000 cash can be a very difficult ask for someone, you know, trying to buy a first home. There's just not that super low price home market. So I think for our agents that are listening to this, or, you know, keep in mind that that doesn't have to be a sticking point now, or they don't necessarily have to go through some of the other higher cost options because of that. So I think for a lot of our clients, seeing that they're needing help from parents and grandparents to make that initial down payment, this could be a really valuable tool. So thank you guys very much. Do you have anything more?
No, the only thing I would add is, you know, everyone's got a unique situation. And if you have any questions or you think it might apply to somebody, please reach out to Jody or reach out to myself. We're more than happy to be a resource to you, help you, you know, close that business. And, you know, we're happy to send out any information you would like. So send an email. We'll send you the fact sheets. You've got our phone number. Please call, and we'll do whatever we can to help you out.
Absolutely.
Thank you guys very much. And thank you guys for listening today. And please, again, contact information is in the chat. If you write it down incorrectly, forgot to write it down, you can always reach out to me. I'm more than happy to put you in touch with them. But if you have any clients that you think this could be helpful for, I really urge you and encourage you to get in touch with them and let Philip and or Jody speak with them and let them know. So thank you very much.
Great. Thank you, Ron.
Thanks.
Thank you.